What factors ultimately stop this precious metals bull run, and how close are we to that?
Oh, well, peace on earth, balanced budgets, those are the two things that will stop this gold run and cause a real price correction. I don't
Okay,
see
so you
either
don't
of
see it happening.
them. No, I really don't. I really don't. I've never been more bullish in my 44 years doing this than I've been over the last 6 months for all the factors we've discussed.
Yeah, and as I was listening to you talk about all these different factors and the central bank buying, I have read that the European countries, have a 4% of GDP mandate to own gold in terms of 4% equal to their GDP, and they're not all there, so they're also buying. Their central banks are also buying.
Yeah,
So,
Poland is doing that, which was a surprise to me. I was like, Poland? Well, they're on the Russian border, but also for that same reason, they're trying to get up to 20% of their holdings. 20%, I think they're about 16% now relative to their economy. The way I saw it, yeah.
okay, so President Trump has spoken about leading America into the new golden age. He has not defined what he means by the golden age. What's your interpretation of what he means there?
Well, he and I both grew up in the 70s when the U.S. was the dominant country in the world. China had not risen. We were a manufacturing economy. He wants to bring us back to a place where we have a lot more self-sufficiency, where manufacturing is done here, which is fundamentally inflationary because the costs of employment, insurance, things like that are higher here than they are in other countries. So I admire what he wants to do. We're energy independent. In fact, we're one of the biggest exporters of energy in the world right now, but that it could be a little bit short-lived over time because of shale production. Shale production is not long life wells, but I hear there's so much oil in the Permian Basin, it doesn't really matter that much. So he wants to get us back into a place where, people prosper. And the middle class, the lower middle class, and the lower class have been gutted by this inflationary wave. And I'm not sure how you fix that without bringing prices down or their wages up. And wages are coming up, but if we've got an immigration problem in the country, they're going to really work hard to save that, to stem that down rather, and that gets rid of a lot of cheap labor too at the same time, right? So we'll have to see how aggressive they are in moving people out of the country who don't belong here, that may be helping to support lower wages for some of the things we get, like agriculture. So, I know Donald looks back to an era when the U.S. was dominant, when we were self-sufficient. And the world has changed a lot in the last 20 years with us farming out all of our manufacturing to the rest of the world. And now we're an importing nation. So he wants to get us back to a position where we can export more, but then you've got to have countries that want to buy what we have to offer. And China's going to give us a real run for our money, no matter how you slice it in that regard.
So I'm sure you may even know Dr. Judy Shelton. I'm sure you've heard her discussion about wanting to have these 50-year bonds that are backed in part by gold. Have you heard about this?
Yeah, on the fringe, a bond that's longer than 30 years to me is like a home loan that's longer than 30 years. It doesn't relate, because what's the productive cycle of most people? 40 years, 50 years is pushing it. And, anything that's that long, just really, I'm scared of it to start with.
So you're skeptical. So you're skeptical of her idea there.
Yeah, I am.
Is there a reason why she's talking about backing it by gold, though? Is she wanting to, she's up for a seat on the FOMC, by appointment by Trump. If she gets on there, and she is a big believer in gold, and she just wrote a book to this point, I mean, is she going to be pushing some quasi backing, of gold in order to offset what's happening with the BRICS?
Perhaps we'll just have to see. I'm not up on that to comment intelligently. So
Okay. So, Dana, from where gold is right now, I think it's in the 25.50 range, somewhere in there. Do you recommend buying any dips from here with confidence as the lower range is likely in, or do you recommend giving it more time to see if there's going to be another flush down coming?
well, I'm a chartist, so I look a lot at where's resistance going up and where's support coming down. Right now, we had support at 26.20. We've gone through it. We've got mild support at 25.70 that we're touching around right now. We've gotten a little bit lower. There's real support at 25.25. So that is an important level to hold for me in the short term. I do like it as a dip to buy into, but I might save a little dry powder in case things go a little further. The next level down for me is 24.25. So it's not that far. And I don't think gold's going to get that much cheaper, to be honest with you. I think it will become attractive to other players in the world, and they'll buy into any kind of a dip. My client base likes this dip that we're in. We're getting some buyers coming in more than we've had at 27.50 and north of that. Normally, the public kind of chases a rising market. We have had some profit takers, though, too, who are a little scared of this drawdown because they think it's going to go further. But I don't think we get much below 2,500, maybe in the 24.50 range. And I would look at that as a real buying opportunity if we even get there.
So, Dana, let's discuss the S&P 500 to gold ratio. At 2.3 ounces of gold equal to the S&P 500, the S&P to gold ratio is historically stretched to the upside. What's notable on the chart, which I do not have in front of us, is the S&P to gold ratio experienced a very similar level and a very similar pattern just before the 1971 breakdown due to Nixon taking the U.S. off the gold standard. Also, the only time that the ratio has ever been higher than now in 1971 was during the internet bubble to 2000's peak. So we're basically at the highest point, tied with the 1971 peak outside of the 2000 internet bubble. Is the S&P to gold ratio still relevant, and do you expect some kind of reversion to the mean?
Yeah, that's not something I follow, to be honest with you. I do think that, as I talked about earlier, the herd mentality we see across all markets in equities now, it's more of a herd mentality than it is a technical value buying mentality. So that's a little out of my wheelhouse, to be honest with you. I have looked at the gold to oil ratio, right,
Okay.
which Luke Groman talks about. And from 1980 all the way into 2008, that gold to oil ratio was about 8 to 10 ounces of barrels of oil to 1 ounce of gold. And now that ratio is pushing 40 to 1. It's got to 39 to 1. And he thinks it could go to 50 or even 100 to 1. And the reason it's meaningful is because, we've used oil and dollars as the mechanism that circulated most of the dollars throughout the world over the last 50 years. Saudi Arabia sells oil, they get dollars, they buy U.S. treasuries, rinse and repeat. Well, what's happening now is countries are using commodities as a settlement vehicle in lieu of dollars where they can in the global south, the BRICS countries. But gold is the best one of them for this. And the reason is because nobody needs it. You don't have to have gold. So if the gold price goes from $2,000 to $8,000, it doesn't affect countries that are importing or exporting oil or other things. So when the oil price goes crazy up or down, it spikes budgets, it costs a lot, causes recessions, all kinds of weird things happen because everybody needs it. But gold as a settlement vehicle is not needed. So he's looking at the oil to gold ratio and thinking if more and more countries become involved in gold as a second reserve currency to the dollar, he sees that ratio potentially going a lot higher. So I think that's more important than a gold to equities ratio, because I think the equities game, is more of a herd mentality than anything else at this point in time.
Well, that's interesting. So the extreme majority of Western investors do not own any gold and silver. In fact, on the whole, they're about 4 to 5 times under owned compared to the historical mean from the last 4 to 5 decades. You're shaking my head as I'm saying this.
Yeah.
So what do you think gets the public desperate enough to trigger finally owning gold and silver? And what does that look like when the generalist Western investor is desperate and their ownership reverts to that mean?
Well, let's talk about the fundamentals here. Number one, if you've lived in a country where your currency's failed or you've been invaded, you like gold. And that's most of the rest of the world except for the United States, where we haven't had either of those things happen yet, right? So we don't have a gold culture. Europe buys 2 to 4 times the amount of gold as a continent as US does, and Asia is twice as much as Europe. So your numbers are right. Now, we did train a lot of people that never owned gold before to buy it during the great financial crisis between 2008 and 2011. Our customer base as an industry, tripled, quadrupled. Those are not gold bugs or gold believers. They were using gold as a means to preserve their wealth when they were frightened, right? A lot of those people shed gold during Donald Trump's first presidency between 2018 and 2019, when the economy was looking good, the stock market was doing well. They didn't think they needed it anymore. Well, then COVID came. We had the economic closures. We had the debt surge. Some of them got back in again. So we've trained more people to own gold in this country, but we do not have a gold culture. To get a gold culture, we've got to either have some real problems or to have a real event that scares people financially. That's what's going to drive the American public. This run from 2070 in March of this year in gold to 2,800 didn't bring a lot of U.S. buyers into the market. These are global buyers driving the price higher, central banks driving the price higher, because there's not fear in this market.
So fear over greed is what you're saying.
Fear first, greed second.
Yeah.
Yeah.
All right. So Dana, what are the strong variables that this precious metals bull run is built on, and have any of them changed just because of the election?
Well, number one, central bank buying. It's material. It's big, and it's going to continue. Number two, debt and deficits, financial insecurity. That's number two. Number three, you've got geopolitical problems right now, right? And we talked a little bit about the Israeli-Iranian conflict. We've got the BRICS nations, right? It's an us against them world that's growing. The BRICS nations did not have a need to get off of the SWIFT international banking system until we made it so that they needed an alternative when we sanctioned Russia. And now they're not going to have a BRICS currency for years, I don't think, but they're going to create the infrastructure to allow that trading to be facilitated outside of the SWIFT banking system. That's going to challenge U.S. global hegemony. I always have a hard time with that word, hegemony. It's a slow train coming, but it's coming, and they like gold. So that's going to help to underpin gold too. Right now, what we have is just a bump in the dollar that's a Trump bump that could be reaching its apex about now. How his policies and administration act going forward, we have yet to be seen. So when the rubber meets the road, we'll know a little bit better. But I think the fundamentals that are underpinning gold there's a lot of them. They're stronger than the negative impacts we might see. And they're big trends that we're going to continue for a while longer.
So you mentioned a little while ago that you've seen a few trends just since the election, but over the last 3 to 6 months, what trends are you noticing in retail precious metal purchases and interest that's different than before the last 3 to 6 months?
Well, we would get dip buyers in this gold run, or we'd see the gold price move from one trading range to another trading range and be stable. This run from March, April of this year, from 2070 to 2,800, it's been really relentless. It's been almost a bullet higher, and it's left a lot of people wondering, I missed it, right? So I don't want to get into it. So that's one of the trends we haven't seen. We're getting some dip buying now. I think we'll get some more dip buying if we go lower. But it's just been a different world over the last 6 months than we've seen. Plus, we had the uncertainty over the presidential election, which is now resolved. And we've seen the stock market doing really well. And Bitcoin's taken off too. Although I would like to say something about that if I'm not front running you.
No, please.
So what happened with Bitcoin, I looked at the chart on Monday, it took off. Monday was Veterans Day. So we're taping this on Friday of the same week. The bond market was closed on Monday. So there was no available liquidity within the bond market or buying or selling. And gold sold off $60 the same day. To me, that was a palpable representation of a move out of gold, which was falling because of the rising dollar, pushing Bitcoin higher. Because what Bitcoin really is portable gold, right? It's liquid gold in the digital sense. And I saw a real rotation. I think it's short-lived right now, but that was a little worrying to me because Bitcoin has stolen some of gold's thunder over the last few years. One of my trading partners told me, 3-4 years ago, he asked me, how much do you think Bitcoin's taken off of the price of gold? And this was when gold was $1,800, $1,900. And I said, I didn't really think about that. What do you think? He said $500. And that's when, gold hadn't broken over 2070 at that point in time. So there's an obvious trading between the two. How it goes forward, I don't know. Bitcoin's peaked. It's down a bit now. And I do think gold is bottoming here. So
interesting. All right. So in your analysis, Dana, what factors ultimately stop this precious metals bull run, and how close are we to that?
Oh, well, peace on earth, balanced budgets. Those are the two things that will stop this gold run and cause a real price correction.
So you don't see it happening.
No, I really don't. I've never been more bullish in my 44 years doing this than I've been over the last 6 months for all the factors we've discussed. And they're big material, longer term factors. Until we see how the BRICS nations really resolve how they're going to disabuse themselves of the dollar in material ways that they're trying to do now that they can't because there's not a viable alternative to the dollar except for gold to a degree. Until that happens, I think gold is going to continue to rise.
So if you had to put an inning on it, if we are in 9-inning baseball game, where do you say we are?
For gold?
Yeah.
Well, I said we could be in a 30-year pattern. And starting in 2000, 2001, that would mean 2031, which means we're about 5.5. Maybe we're at the top of the 6th.
Okay.
But the last couple of innings are going to be the most exciting.
Well, that is exciting. I like that. All right. So, Dana, according to the Silver Institute, record industrial demand and a recovery in jewelry and silverware is going to lift demand to 1.21 billion ounces in 2024, while mine supply rises just 1%, somewhere in the 800 million ounce range, somewhere in there. So this is the 4th consecutive year of sizable silver deficits with nothing on the horizon to change this trend in 2025. At what point do these massive deficits catch up and matter and the silver price sharply rises?
Well, we're already seeing the first part of that with silver going over $29 for the first time since 2013, 2012. So I think that the fundamentals, and I've looked at those statistics myself, you're right. The fundamental setup for silver looks fantastic. Now, there's a lot of above ground silver, like there's a lot of above ground gold, but most of the gold, we don't have the attrition rate in the above ground gold that we do for silver that gets used in industry, car
and then
batteries,
thrown out.
Yeah, or blown up in Tomahawk missiles, right?
Exactly.
So I think it's going to start to matter because silver mining is a byproduct mostly of other metals. And if the price runs, they can't mediate that easily by putting more supply in suddenly, right? So I think the silver upside potential is really high. But it's more volatile than gold because it is more industrially related. I think a lot of its price action higher will be contingent upon China having a better economy, right? And I think their weaker economy is kind of holding it in check, like I think they're holding platinum and palladium in check for the very same reason, only more so. But I really like the way silver is looking right now. And anytime silver gets under $30 an ounce right now, and it's not that far from there, it's 30.50. I think it's a buy. And I think the potential for it to be 60 to 80, $90 an ounce is really good. And when it runs hot, you won't have time to play catch. You won't have time to jump in without leaving some money on the table.
It goes parabolic very quickly. So right. I'm sure you saw the news last month or a couple weeks ago that Russia announced in its budget that they were going to be buying silver reserves. Mm-hmm. Did you happen to see that?
I did.
What's your take on that? And do you foresee potentially other sovereigns following suit?
Well, I don't know enough about what the motivation there is to really speak very intelligently about it. But the fact that they want to means they want it. And they may want it for a green economy move or more military. I mean, look what they've done with the Ukraine. And silver is needed in a lot of industrial, for a lot of industrial reasons. So the fact that they want to stockpile it, I think, is just another reason why silver looks promising. Yeah. And China's been buying, metals, commodity metals. That's why they want to have so much investment in Africa, because that's where a lot of the resource materials are, right? These countries are not stupid. They're stockpiling what they're going to need in the future. So when Vladimir Putin says he needs some silver, I like it from a price standpoint.
Yeah. So Elon Musk has stated that solar power is going to be the vast majority of power generation in the future. And solar requires a boatload of silver, as does, as you said, military weapons, AI data centers, which is growing so quickly, electric and hybrid vehicles, and really everything else that's part of the electrification movement. So where is everyone around the globe going to source all of this silver at these low prices when it's already in a massive deficit and supply is stagnant?
They're not. That's why the price could really run, when it runs, it could really run hot. And a double from here is pretty easy once it gets going. I thought this move over 32, 33 to 35 would be the start of it, but we've gotten reversed now. But silver's been testing a breakout at this price of gold, even over $2,500 an ounce. I've been saying for 6 months, silver should be $40, $45 an ounce. Right. Bitcoin went up, 8% in one day the other day, right? And it's given a little bit of that up. Silver's going to do the same kind of thing when it actually goes. It'll go up 10%, 20% in a day, and people go, what happened? And everything that you're describing will have cumulatively have come into play, and we've reached that tipping point. We're just not there yet.
So are you seeing a day, though, down the road where nationalist policies from the top of each country is going to get so protective over their mining, specifically silver, because of the deficits that they're in and the really the stability of the output? There's really no improvement in silver mining output production. And so do you foresee a time where they're going to get very protectionist over these mines?
Oh, yeah. I mean, we're already seeing rare earth metals, right, being treated like protectionist policies. China, they're not going to export rare earth metals, right? Well, when they become in demand enough and the public need for them outweighs the availability of them, yeah, that's very possible, especially if we get into a protectionist world, which is how Donald Trump is going to lead us to a degree, right, into a more protectionist of an American economy.
Do you see
how that translates?
Yeah. Do you see in a Trump administration an improvement in mining times, permitting times? Do you think we're going to get there a little bit quicker because of some of these problems we're having with supply?
A little bit. That's way down on his list.
Okay.
Right? Yeah, that'd be like number 80 or 90 on a list where number 1 through 20 are really substantial.
Well, this has been a fantastic conversation. Before we wrap up here, and I asked Dana our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History Nor Economics. This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Dana as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. It's now time for our Golden Nugget segment. Dana, let's discuss a future scenario. Okay, picture a dinner party, Christmas 2029, with two tables. One table is extremely happy for what they invested in beginning in 2024, 2025. It helped them to give them financial freedom over the last 4 years. And one table, it's extremely sad. For what they invested in beginning in 2024, 2025, because not only did it not help them, it actually hurt them. What do these two tables represent to you in terms of asset classes?
Well, I think we are in an inflationary environment. So I like everything that's tangible that people need. I like real estate. I like precious metals. I like energy. I think that we could see assets that are not tangible, stocks, hurt. I do think that there's potential for a big correction in the equities market. I wouldn't want to be holding dollars long term or currencies because I think they're just going to continue to dilute. So I do think over the next 4 or 5 years, we're going to remain in an inflationary environment where tangible assets, the things of life, will do better than other investment classes.
Really appreciate that. Dana, thank you for coming on to Metals and Miners, for being so generous with your time and your analysis and ideas. It's been awesome to spend the time with you. Would you please share with the viewers any important message that you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Well, thanks, Gary. Thanks for having me. I really appreciate it. So I'm president of American Gold Exchange. It's a company I started in 1998. We're in our 26th year. We're a physical national mail order precious metals and vintage U.S. gold and European coin dealership. We have an impeccable national reputation. Our live transparent pricing on our website, which is information rich. So that's the best place for you to go, www.amergold.com. Our email address is info@amergold.com. And if anyone wants a physical precious metals getting started guide, we have a 12-page booklet we can send you that's the very basic stuff, very easy to understand, not complicated, on what the best physical precious metals bullion items are. If you're interested in owning physical precious metals, just send an email to info@amergold.com and put Getting Started Guide in the subject line.
I appreciate all that, Dana. I'm going to put all that information up on the screen. There'll be click-throughs in the description area. Guys, if you are not following Dana, you really need to be following him. I've been following him for well over a year, but back in July, he and I met at the Rick Rule Symposium down in Boca, and Dana is a fantastic individual, and he's somebody you want to get to meet and get to know, especially if you're a believer in the gold bull market. So, Dana, I look forward to having you back on sometime soon. Thank you for being here with us, and everybody else, thank you for watching. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History Nor Economics. This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.